Lamar Villere, one stock you like at the Villere Balanced Fund is 2U. This is a cloud-based education provider. Stock's doing real well this year. It's up about 30%. Still, there's a lot of short sellers in there. About a quarter of the shares are sold short. So what do you have to say to the doubters?
Sure. So, we think 2U is going to add 6 new programs this year, 9 new programs next year. This is a group that partners with established universities to create online versions of their master's degrees. And we think they're going to be able to get to profitability, EBITDA profitability this year, and real profitability potentially next year. So we think the outlook looks pretty good for these guys.
Another stock you like is Taser, having a great year. It's highly shorted as well. I think around 20% of the shares are sold short. That said, stocks have really fallen in the past week or so because they lost a contract in New York for their body cameras. Tell me what's going on there.
Sure. They are right now, as you know, they're the dominant provider of non-lethal weapons. Their growth engine has really been the body-worn cameras. And up until the New York decision on Monday, they had won basically every major city contract. They didn't win that one. One of their competitors effectively bought it. They took a very unprofitable stance to win the business. And Taser lost that. We still think it's attractive. And now that it's really pulled back from there, we think it's a much more interesting opportunity than it was earlier in last week.
All right, you're also bullish on Steris. It's down around 4% so far this year, and an otherwise up year for stocks. What's holding this one back? A lot of things got to be sterilized out there because a lot of infections in hospitals.
That's right. In fact, if you check into a hospital, there's a 1 in 20 chance that you're going to catch an infection from the hospital. So you're actually going to go to the hospital and get sicker than you were when you went in. So we think it's an attractive place and it's an attractive business. Steris is the #1 player. They're based in the UK, so this one traded off significantly after the Brexit vote, even though 80% of their revenues are US. It's a US company. We still think there's a little bit of them being thrown out, the baby with the bathwater, based on being UK based, but this is a US company and we think the prospects are very good for them to continue to grow.
All right, and then finally LKQ. This is an auto parts distributor. They recently expanded a little bit more in Great Britain. Why do you like this one? It's up around 10 or 11% so far this year. What takes it higher?
Sure. So they're the dominant provider of aftermarket parts, auto parts in the U.S. They're bigger than they're 20 times the size of their next competitor. So they're massive market share. In Europe, it's still a very fragmented market. There's not a national or an international European player. So they're gradually growing by acquisitions. As you said, they made the acquisition of the UK reseller with 100 distribution points this week. They're going to continue to do that and gradually roll up the European market just like they did here in the U.S.
All right. Well, thanks a lot for coming on and talking about those stocks.
Thank you.
And thank you for watching The Street.